up is the spread that people...
Hello everyone and welcome to my weekly update with me, Richard Perry, market analyst at Handtech Markets. Each week I take through the key events I believe will be driving your investments in the coming days. Now, moving into this week, well, first week traded week of the year certainly contained a lot of volatility, certainly through equity markets, and included a forex flash crash, so quite a lot to get into the first few days of the year. But certainly moving into this week, we've still got the, this elevated fear of volatility coming through markets. Equity markets still very volatile. Certainly the reaction that we saw on Friday would suggest that. We saw a very strong payrolls report ultimately helping to drive risk appetite more positively, and then that got exacerbated by the dovish comments from the Fed's Jerome Powell. Now, those Jerome Powell comments are really important, I think, for the dollar coming up, because I think that there is an air of dollar correction that we're beginning to see coming through the markets, and that seems to be sort of taking shape through dollar index falling away, but also dollar yen, which had that flash crash on Thursday last week, but still I think reflects the fact that the dollar will be more corrective. You look at the yield differentials, for example, they are dollar corrective at the moment, and we're likely to see that coming through on euro dollar, on dollar yen as well, for further moves there. But we've got the fact that this US-China trade negotiations are taking place early this week, and this is sort of the sort of precursor, I suppose, towards the talks that are going to be sort of ramping up through January into February, with regard to trying to put an end to this trade dispute between the US and China. Now, these are the sort of preliminary stages of these negotiations, I suppose, but any sort of news flow that comes out positively from them could well help to sort of generate some more positive news flow for sentiment. And I think that would be the key factor that we need to look out for from these negotiations. But also, a key driver of the dollar last year was the trade dispute with China. So if that starts to reverse, would a dollar correction start to set in? I think it may well do. So that's one of the key factors to look out for this week. Furthermore, we've got other data points such as the FOMC minutes. Now, this is interesting because we had that rate hike in December from the Fed, but they didn't really do a great deal to change the dot plots. Now, we'll be looking out for more information in the minutes as to why that was the case and whether the Fed isn't actually more concerned about the global slowdown than they're leading on. So let's look out for that on Wednesday, that is. But also we're looking out for the inflation data for both China and US towards the end of the week. It could have some important moves there because inflation has come significantly lower, or expectations have come lower, and we'll see that through the hard data likely to be on Thursday and Friday this week. So, FX markets. Well, as I said, the dollar's looking a little bit more corrective, so let's look out for that. But also, how's the euro looking? Well, it's looking a little bit more stable since the announcement that Italy had its budget accepted by the EU and subsequently ratified by its own parliament as well. So it certainly seems as though that the situation is a bit more calm on that front, and that is going to allow the euro to start to build, I think, a degree of support, certainly against the dollar, and perhaps moving up into the mid-teens again, mid-high teens again on euro dollar. In terms of sterling, Brexit is never too far away, so the parliament resumes this week, and its debate is going to be taking place from Wednesday, I believe, and that's going to continue to drive some volatility through sterling as the week goes on. In terms of dollar yen, still settling down from that flash crash, so how the market settles is going to be, I think, interesting in the coming days. But I think ultimately the yen still seems to be a bit of in favour. However, if there is some decent traction on the trade negotiations, maybe that's going to start to unwind a little bit, so watch out for that. In terms of indices, well, we've had actually a pretty reasonable start to the year with regards to equity markets, where we've seen the DAX, which has rallied back above 10,700. That's a positive. You've seen FTSE 100 rallying to 6,850. That's a positive. Although these are some key resistance areas that you need to look out for, so watch out for, as I said, 6,850 on FTSE 100, for example, and we're also looking out for 2,530 to 2,600 on the S&P 500. A lot of volatility through US markets, so watch out for how the markets respond to the overhead supply at that resistance area on S&P 500.
saying a guide interested in countries.
As for commodities, well, commodities are generally driven by risk appetite, but also how the dollar performs. Now, that's certainly two key factors for the gold price. Improved risk appetite is gold negative, but the dollar moving corrective is gold positive. So we're seeing gold rallying still, maybe not to the extent at which it has been previously. Maybe there's going to be a little bit of a correction that will give you a nice little buying opportunity, but I think gold is still set up for a positive 2019. With regards to the oil price, positive moves on risk appetite is positive oil, and also we're seeing some cuts in production seemingly through OPEC, which again is allowing the oil price to continue to recover. Some decent rallies that we're seeing through WTI and Brent crude up towards resistance areas of overhead supply now. Around $50 on WTI needs to be watched. Can it get through those levels is the key question for this week, I would say. And finally, across the data points, we're sort of looking out for, I mean, the ISM non-manufacturing is going to be important, I think, on Monday. We saw such a huge decline on the ISM manufacturing last week. How is the service sector responding to that? How is the service sector affected by sort of that change in the manufacturing sector? So that will be the key factor to look out for early this week. But then we're also looking for a Bank of Canada rate hike of 25 basis points. Is it going to do that? Wages were a little bit disappointing on Friday, so is it actually going to be pushing ahead with the rate hike as expected? And then, as I said previously, the inflation data for China and the US will be important on Thursday and Friday. How the commodity prices, or the decline in the commodity prices in recent times, how that feeds through into the inflation data going forward. So with that, I wish you good luck in your trading this week, and I will speak to you again next time.
You need someone who